The stock market has performed very well recently, and finding high quality stocks trading at a discount can be very hard. But I've yet again done all of the research for you, and I found 3 high quality dividend stocks that is right now trading at a discount, and these stocks are perfect for long-term growth. But before we get to it, then I do really want to hear from you, so please leave a comment below and tell me what stocks you've set your eyes on at the moment. But moving straight into the first one on my list, and this one is also one of my personal favorite stocks, and that is StarBucks, stock ticker SBUX. You see people with Starbucks coffee all over the place, and it seems like wherever you go, then there's always a Starbucks coffee shop near you. And when it comes to Starbucks, then a lot of things has happened during the last year, and that makes them really interesting. They just changed their CEO, and whenever that happens, then it always brings a lot of changes, and that might be a really good thing for Starbucks. And for those of you who have been following Starbucks for a while, then you also know that their biggest markets is the US and China, and the growth in China has been really slow during the last couple of years, but they have finally said that they think they are the turnaround and that the growth in China is gonna happen, and that is hopefully gonna bring some more profits. But right now then they have a share price sitting at $92 and a market cap of $105 billion. But the share price just can't seem to move in the right direction. And during the last 12 months, then they are down by almost 12%. And year to date, then they are down by almost 4%. And they are right now trading pretty close to their 52-week low. We are at the point right now where the valuation for Starbucks is looking really promising. And I've started buying more and more shares in Starbucks because I do believe that the current price is really good. But let's just have a look at their dividends, because Starbucks is really good when it comes to dividends as well. And they currently have a dividend yield sitting at 2.45%, and that is pretty nice. And they also have a payout ratio sitting at 60% and a 5-year growth rate in their dividends of almost 10%, and that is also pretty nice. And they have been increasing their dividends for 13 years in a row. Starbucks has for a long time been a company that has been known for having a really high dividend growth, but that has stalled a bit during the last years due to the pandemic and the slow growth in China. But since the pandemic is over and that they're expecting a turnaround in China, then hopefully they're going back to their previous levels of dividend growth, and that makes Starbucks even more interesting. And most analysts are also rating Starbucks as a buy at the moment, with an average share price target of $107 within the next 12 months. And that is an upside of 17% within only 12 months. Overall, then is Starbucks looking really promising at the moment. And I do think that the current valuation is looking really solid, and right now might be the perfect time to buy Starbucks. And next up, we're going to the real estate sector. And here we have a great REIT, and that is Agree Realty, ticker symbol ADC. And this is a real estate investment trust. And just like all other REITs, then they have been suffering a lot during the last year with the really high interest rates. But the Fed has finally said that they're most likely going to reduce the interest rate during the next year, and that is going to benefit REITs a lot. And they currently have a real estate portfolio consisting of more than 2,100 properties with more than 44 million square feet spread across 49 different states within the US. So that is a really nice real estate portfolio. And they also have some big tenants like Walmart, Home Depot, TJ Maxx, and many others. And they currently have a share price sitting at $57 and a market cap of $5.6 billion. And during the last 12 months, then they are down by 19%. And year to date, then they are down by 9%. And they are trading pretty close to their 52-week low as well. And as you can see based on the performance, then they've had a very rough year. But that also makes perfect sense with the really high interest rates. But that also creates a perfect buying opportunity for us investors. And according to most analysts, then is ADC also a strong buy at the moment. And they have an average share price target of $66 within the next 12 months. And that is an upside of 16.5%. But let's just have a look at their dividends. And ADC is really good when it comes to dividends. And they currently have a dividend yield sitting at 5.24%. And that is really nice. And they have a payout ratio of 75%, and that is very normal for REITs. And they have a 5-year growth rate in their dividends of 6.35%. And even though that's not the highest growth rate, then it is still pretty nice for a company that has a dividend yield of more than 5%. And they have been increasing their dividends for 4 consecutive years. And overall, then is ADC looking absolutely amazing at the moment. They have a great real estate portfolio, and they are paying out some great dividends. And once the interest rate is going to fall, then I do think that this one is going to perform very well. So moving on to the third and last one on my list today. And here we have Amgen, stock ticker AMGN. And this is a company that is operating within the healthcare sector as a biotech company. And the biotech sector did not perform well during 2023, and they underperformed the S&P 500 index. But that just creates a perfect buying opportunity for us investors. And healthcare is basically a sector that is growing every single year. So being invested here might not be a bad idea. And they currently have a share price sitting at $279 and a market cap of $149 billion. And over the last 12 months, then this stock here is up by 19%. But year to date, then they're down by 3%. And Amgen has just released a new weight loss drug, similar to that of the medicine giant Novo Nordisk and Eli Lilly. But the markets did not like this new drug, and the share price has therefore fallen. And according to most analysts, then is Amgen now a moderate buy with an average target share price of $312. And that is an upside of 12% within 12 months. And getting straight into their dividends, then they currently have a dividend yield sitting at 3.21%, a payout ratio of 46%, and a 5-year growth rate in their dividends of almost 10%. And they have consistently been increasing their dividends for 12 years in a row. And overall, then is Amgen looking really solid at the moment. Finding high quality biotech companies trading at these values is not something you see very often. And Amgen is both very good when it comes to share price return, but also when it comes to dividends. So right now might not be the worst time to buy this stock here. And these were basically my 3 discounted dividend stocks to buy right now. If you have anything to add to the list, then please leave a comment below.